Good morning, everybody. Today is March the 19th, 2022. It's 8:30 in the morning, and I'm sitting in my backyard drinking coffee. So, I had a lot of people reach out to me in the last few days asking me about inflation and what's going on with the world economy, and asking questions about this petrodollar decline that I had commented about in a couple of my previous videos. So I wanted to go into a little bit of explanation as to what exactly I think is going on. To do this, we need to go back in time a little bit. 1971. That was when Richard Nixon decoupled the US dollar from gold. That was when the US dollar, prior to that, was literally a gold standard note. So, how that had worked at the time was that countries that held US dollars were basically a promissory note. They were a promissory note relative to their value in physical gold. The US Treasury would hold massive amounts of gold, and governments could literally cash these promissory notes in for physical gold. Now, come post Vietnam era, with everything that was going on in the world geopolitically, there was a lot of uncertainty. There was a lot of uncertainty as well. This is the height of the Cold War as well, as to who would come out ahead, both economically and physically, in terms of being the world's leading economy, whether it would be the West or the East. At that time, you had the Warsaw Pact countries that were quite strong, and of course the Western Allied countries, which are also quite strong. However, there was a flee from the US dollar that had started in mid 1970. Now, Nixon realized he had a problem quite quickly, and that was that the US dollar as a gold backed currency was being devalued at a rate significantly faster than what their economy could absorb. So, in short, what this meant was if many more countries or people had started to convert their promissory notes into physical gold, the country would essentially become bankrupt. This happens as a means by printing more money. You've heard this before, how it leads to inflation. Well, what happens is actually quite the opposite. Deflation, the lack of buying power that occurs for a currency when you dilute it. So think of it from this perspective. If you had a $100 bill and $100 was equivalent to 1 ounce of gold, but your country only holds 1 ounce of gold. If you printed a second $100 bill, that $100 bill then is no longer worth 1 ounce of gold. It's now worth half an ounce because you've doubled the amount of physical promissory notes in circulation. This really pissed off a lot of people, so the US needed to find a quick solution. And that quick solution was actually to become a petrodollar. So they struck a deal with Saudi Arabia at the time that all oil sales would be conducted in US dollars. And in exchange for that, they offered Saudi Arabia the world. They offered Saudi Arabia all kinds of money for infrastructure development, for social economic development, for physical protection of the kingdom, which at that time you had to remember what was going on in the Middle East. All the issues with Iran, of course, which are still going on today, formation of Israel and what was happening there. Jordan was having its own issues at the time. Like the entire Middle East was far more volatile than it even is today. So, of course, the Kingdom of Saud was quite happy at that point because they now had the backing of a world superpower. The United States was fantastically happy as well because they now had the world's largest commodity that they could peg the value of their currency to. Now, what that means for today is actually quite an interesting problem that we've run into. 70% of all US dollars in circulation today are actually held by foreign countries. So, what that means is that these countries hold these dollars as a means to facilitate international trade. It became natural for a lot of companies to facilitate trade in the US dollar as a common currency because everybody had to do it to facilitate the purchase of oil already, so there were lots of US dollars moving around, and it created an international benchmark to create a relative value of goods and commodities and raw resources. So, where are we at today? Well, Saudi Arabia has announced that they will be accepting payment for oil from China in Chinese yuan. Now, last week, BRICS member countries, and I really encourage you to go back and watch my video on BRICS again and take a look at how this all relates a little bit more. But they actually had a meeting. So this is Brazil, Russia, India, China, and South Africa. And many more countries are inherently tied in through their economic dealings with China, largely. Or their political polarization favoring China or favoring Russia or India in their sphere of influence. Now that meeting, the purpose of it was actually discussions in creating a common currency. And what this will do is, among many, many other things, is it will shelter countries from the ability to be sanctioned by opposing political views. Countries that have economic or physical advantage by being able to try to repress other countries by means of financial or economic warfare. Well, this is bad news for the unipolar countries. This is very bad news for the European Union, for Canada, for the United States. So if they are successful, and it certainly looks like they're going to be, because there's not much that the United States economically can do against China right now and survive. And I mean survive not in a physical sense, but in an economic sense. We're gonna be in big trouble real soon if things continue down the path that they are. If you dethrone the US dollar as the means for international trade, what are you going to do with all those dollars? 70% of them that are out there to facilitate this, they're not going to be needed anymore. And I would argue actually that we're already seeing this, and we've been seeing this progression for many years, probably north of 10 or 15 years from now. But we've seen it grow exponentially in the last couple of years, since late 2019 actually. Now you might notice or have read headlines that commodities the prices are exploding, and I know you've seen housing prices explode. My argument would be is that the prices aren't actually exploding. It's that the relative buying power of the currencies that we're looking at these properties or these commodities in purchasing has dropped. There's two ways a price can go up. It can go up through economies booming, there's lots of money out there, everyone is doing really well, the economy is strong, so more people are buying stuff, and that naturally drives up the surrounding prices of things. Commodities go up because you need more steel to build things, you need more nickel to create batteries to manufacture, you need more lithium to create EV car batteries, things like that. However, if we look proportionally at how some of these commodity prices have been behaving, especially when we start looking at core commodities, this is things like nickel, cobalt, steel, they've been exploding. And nickel is up over 300% alone since 2020. Now, it's safe to say, and I think everyone can agree with this argument, our economy has not been exploding since 2020. In fact, our currencies haven't been doing that well since 2020 either. So what could be the mechanism for this? We've been in COVID lockdowns, supply chain shortages, all kinds of things going on. These are not times of economic prosperity. This is why I assert that the actual increase that we're seeing in property values and commodities values internationally is the first step of the devaluation of traditional North American fiat-based currencies. I'm talking about the Canadian dollar, the US dollar, and of course the euro. So, where do we go from here? Well, you might have heard a lot of people talking about the Great Reset. This is a function from the World Economic Forum. This isn't tinfoil hat kind of stuff. You can even go back and hear Trudeau talking about it in a press conference in early 2020, early pandemic times, where he talks about this being a great opportunity for us to come out and reset our global or North American economies. Well, great reset. What is this going to do? It's going to be a hard pitch on people, that's for sure. My fear is that what we're seeing right now going on in Ukraine and some of the other conflicts around the world is a concerted attempt to undermine the global economy to the point that it will create so much strain and strife on people that they'll be accepting to this premise, that they will say, yeah, okay, things are so bad right now, you guys have a solution? Let's go for it. Now, that might sound far-fetched. You might think a lot of people will resist these sorts of changes and these sorts of ideas. And I promise, I'm not going down some crazy rabbit hole here. This is all very plausible as a scenario of things that could occur. But we get used to this upper middle class comfortable lifestyle that we live in right now. And I tell you, if we take it away, if we make the average American or Canadian or European citizen live like the average citizen in remote Russia or the average citizen in a little village in Africa somewhere, you'll beg for whatever changes it is that they can bring in that's going to return you to the quality of life, or at least has the prospect to return you to that lifestyle that you're so comfortable for. We're creatures of habit, and we will align ourselves with anything that can bring us resolve when it comes to that. Now, headlines. Wow. Financial Times reporting China and Russia and the race to post-dollar world. Okay. CNBC. How much can and will China help Russia as its economy crumbles? You should read that. Investor Intel. China and Russia move to unseat the dollar as the number one global currency. QZ Media. Why does it matter if Saudi Arabia's oil is sold in Chinese yuan versus US dollars? And of course, the Fred Institute, this is the major US financial economic research forum. They have an article that just came out on U.S. federal housing finance agreements and the house pricing index as it relates to the U.S. dollar. So, where are we going to go? What's going to happen from here? Well, I can't tell you. All I know is that there's too many things geopolitically right now around this world that don't add up. They don't line up. Nothing makes sense. Ukraine as a country, and I understand the moral arguments here, I understand how people absolutely hate wars, but Ukraine as a country, in terms of what we're doing for a mobilization right now, and the damage that we're doing as a result of the sanctions on Russia to our own economies, is just not worth it. That's a matter of fact. It's not even a matter that's really open to debate. You could say, well, there's an existential argument for stopping a tyrant, that sort of thing. Okay, well, where's the existential arguments for the last 30 years in wars that we've either participated in or intervened in or stood by and watched happen? We didn't intervene. And it's not the premise that some people are pushing forward that, well, we need to intervene in this now, or the big upheaval politically or sociologically because it's a white country. It's not a brown country or things along those lines. That's bullshit too. It has absolutely nothing to do with anything along those lines. What it has everything to do with is an opportunity for the justification of a transition from what our current economic model is to what a future economic model is going to be. It's the dominoes that are in place to lead us to where the end result is going to be. And I'm not saying that this is going to happen overnight. In fact, this is just the very, very early stages, I believe. This is a transition that will take many years to fully accomplish. But one thing I do believe that you're going to see happen very, very soon is that, like any apex predator or alpha when they're dying, when they're in a position that they're backed into a corner and you're jeopardizing their way of life, they will lash out at the world. And this could be a reference to Russia, it can be a reference to America, it can be a reference to any of the big players in the world. But what we will see is a bipolarization. For years, you've heard people talk about globalization and creating a one world government. No. You're going to see globalization, but it's going to be a bipolar type system. It's going to be basically the East versus the West. And we're looking at the very early stages, I think, of the largest, well, it'll make the Cold War look like child's play. It's going to be a Cold War militarily, and it's going to be an economic war and a digital war all at the same time between two diverging major, not just economic philosophies, but philosophies in the way of life and in the way that we do things. So I published a map yesterday on my Facebook feed. I'll put it in the notes below for you to have a look at. It's all the countries that are politically aligned or have major debts with China, Russia, India, BRICS member states, and the likelihood that they will fall on which sides. And this isn't small potatoes we're talking about. In context, you need to look at how much population, because I mean population definitely affects GDP. China and India alone account for 1/3 of the world's population. Forget about all the other countries that are inside their sphere of influence and where that's going to go. So, interesting times ahead. Give me your thoughts. This is, again, just a brief overview. We can go into much further detail and discussion if you want to down below. I always have time to chat. Have a great day. Take care. Bye.